Episode of Market in the Morning. I'm your host, Kevin Dubrisky, with another killer episode of Market in the Morning for you guys. And we have the one and only co-founder of Market, Nilabh, on with us. And he's going to go over some technicals, fundamentals, and he's going to show you guys how Market AI really works to give you guys some insight into the markets. And we have a bit of an announcement coming up too. So make sure you guys stick around because Market in the Morning starts right now. Nilabh, good morning, man. Welcome.
Good morning, man. Good morning. How you been?
Dude, I'm doing good, bro. How you doing?
All good, all good. New day, new opportunities. Happy to jump on. Appreciate you having me on. Little change of guest. G was supposed to be on, but he had some things come up, so I'll be fortunately filling in. So thanks,
Oh,
thanks for having me on, man.
dude,
Appreciate
always
it.
good to have you on. G will be joining us in a few minutes, right?
Yeah, exactly. G will be joining us in a few short minutes, guys. But
Make sure
let's
you
let's
stick
honestly
around.
jump into it. We've had a massive week, especially with the Fed rate decision that happened yesterday, where the Federal Reserve did their expected 25 basis point rate cut. And this is something that we had been watching the probabilities of it since November, since end of October. At first, we were pricing in the cut, then no cut, and then back to pricing in the cut. And we always kept mentioning that it takes one or two data reports or one or two speakers to really sway the probabilities in the other side, right? So the Fed cut their rates yesterday. And this is the actual rate, not the rounded up number that retail sees. And I know what you guys think. There's a lot of new stuff on this calendar page, and we'll get into it. But we know that the Fed did their expected rate cut, and now the rate is sitting at 3.625 or 3.63% if you look at the overnight lending rate. So we have a ton of data coming out today as well. Right now, it is currently Thursday, 8:30 a.m. Eastern. We are approaching. And the set of data that's in focus is initial jobless claims and continued jobless claims. So if I click the brain icon here on our new calendar, you'll see that we have something that's new. We have a new AI analysis by market, which is way more real time. It's way more actionable, especially with what we have built called the market playbook. And in this side over here, you'll see that we have a few columns. We have the actual, we have the bank forecast, we have a forecast that you see on regular retail calendars. We have something new like the min and max values, and of course, prior. When I compare it to Forex Factory, I only see an actual, a forecast, and a previous. And this is where market really comes in, is because we have institutional ranges and institutional forecasts for what they are expecting the data report to come out as. Right? Not always will it be the same as a forecast, because this is more of a poll that the top 10 institutions in the world do, such as JP Morgan, Bloomberg, Bank of America, Citibank. These are just to name a few, and Reuters as well. So currently what we're looking at is we have a maximum expectation of 240K. We have a minimum of 205K. And what the forecast, both the bank forecast and regular forecast, are saying, with the potential of a 220K initial jobless claim for last week. Now, what this means as day traders is this is where we have the playbook. If we break above the maximum, like if you see over here above the maximum, this means that the dollar is going to be very bearish, because we are seeing an increase in initial jobless claims. And if we are below 225, which is around the forecast, will still be, above it, will still be bearish, because it's higher than the forecast. We're seeing that increase in claims. It's higher than prior. And then so we built this to guide you guys on how the impact would happen when this data comes out, right? And if it's below the minimum, which is 205,000, you can see we would have a very bullish impact on dollar. And just below it, it says higher than forecasted claim should weigh on USD and front-end yields as markets price in faster cuts. Lower claims support soft landing pricing, so watch reaction versus recent claim trends and Fed rate cut odds. So this is completely breaking things down for everyone now.
No,
There is no discrepancies in how to interpret news anymore. This calendar is the single fastest and most powerful calendar in the space right now that actually guides traders on how to trade the data, how to actually, when the data hits, when things are going to chaos, how can you take action? And this is why we built the playbook. So I'm very, very excited to share this. Same with continued jobless claims. We have similar maximum 1.98 million. So you can see that anything above that would be very bearish for the dollar. So we had just have a few minutes, but Kevin, I want to hear your thoughts on the calendar that we have built. Keep in mind, this is a straight institutional calendar that's available on the Bloomberg terminal, on a Refinitiv Icon terminal, which is now London Stock Exchange's workspace. But this is built with Market AI engine powering the back end of it, and it completely makes things way more actionable.
Dude, the whole thing is amazing, and the fact that you said this is a sort of like a Bloomberg terminal, that's where we're pulling it from, but it's not even. It's Bloomberg terminal, but better because it's really tuning out all of the extra noise and it's explaining it to you. So again, you don't need to have, we mentioned on the last show, you don't need to have any type of degree to understand fundamentals anymore, right? Sometimes people would have to go to school for years to really understand the fundamentals of what's moving markets. With Market AI, it almost makes that obsolete. It dumbs it down, it makes it simple, and it gives you the clarity and almost like a tunnel vision. Say, hey, listen, this is what we're looking at. Look how cool that looks. It's got a countdown too until the initial jobless claims right there. That's dope. To the left in the red, the 50
Exactly.
left.
Yeah, so it's way more even user friendly. This is way more
Yep.
user friendly than our previous calendar. It is we have also benchmarked it across every major calendar in this space, and markets comes out faster. And it's not a
Cool.
matter of milliseconds. It's some of these reports come out seconds faster than how Forex Factory would see it or how Trading Economics would see it.
Wow.
So we really went to the biggest data providers on Wall Street and in the world. And we're like, hey, we need this data. It costs us an arm and a leg, but this is what our users wanted to see. They wanted an economic calendar that differs from everything else in the game, that actually helps them trade the numbers. Most
That's
people
awesome.
get scared. They're like, oh, we have 8:30 news. 2-1. So we'll wait for this data to come out. And
Oh,
as you can see, some of the trade balances data has already come out. So we'll wait for the initial jobless claims. But look at this over here. When you see something like this, you're outside expected range and you have higher volatility. This is because we broke outside these ranges. And when we break outside the ranges, you can see that there's going to be higher than expected volatility in this for this currency. So in this case, it's CAD. We're still waiting for initial jobless
it's
claim.
here.
Oh, there it is. I did a quick
Oh,
refresh.
higher. There we
Yep.
go.
So it came out as 236,000, and continued jobless claims came out at 1.84 million. So when I click this, you can see that where it currently played out is still above 225, right? But we're still below the 240, which was our max expectation. So in this case, we are still going to see a bearish dollar, right? So let's just open up dollar for a second and see how dollar is reacting.
Nice.
So we did get a quick push down, right? Dollar's already been selling off. We know that because of Fed's dovish guidance yesterday. We instantly saw a play towards the downside. You can see this massive liquidity wick over here. This was the Fed dovish guidance happening. They did a cut, the expected cut. They went and talked about Powell also came a bit more dovish, and we have seen continued downside on dollar, right? So you can see claims still came out elevated. However, it's below the maximum. So we're not going to get that very bearish dollar. We're still going to get a bearish dollar. But this is where connecting the dots between these institutional ranges and numbers really makes sense. And for continued jobless claim, you can see a fire emoji that we are talking about, how this is outside the expected ranges, right? It is below the minimum. It is below the forecast. It is below the prior, right? So we would see a bit more of a bullish reading in this case, but we know that these are a bit more conflicting at the moment. So we'll watch and see which one holds more impact, right?
Yep.
So we will continue to see dollar over the long term continue to head down toward 96. Not given we get these intraday pullbacks, which are quite normal, as you can see. We saw a new lower low, pullback, new lower low. We could easily do some sort of pullback before we continue to this area over here.
Awesome, man. This calendar is mind-blowing. What an update. Before, market already had a top-notch calendar, now it just takes it to another level. That is fantastic.
Yeah, and from
Good.
our previous calendar, we also made like the analysis of it way more simple, because the main thing is you don't have to decipher things yourself. A lot of these platforms, they'll just dump data on you. They'll dump data on you. You'll have to interpret it, but it's what we're trying to build are these very useful, very unique tools that other people can try to replicate. But I'm telling you, is that they won't be able to come close to what we offer. They don't have the engineering capacity, and they don't have the fundamental knowledge that we have accumulated over the past 8 years in the financial market, and are able to translate it to an everyday trader and really show them this is what this data means. This is a potential impact on this currency. And I am just so excited, because this is just the first version of this new calendar. We have so much more coming. It's going to show us so much more impact. We've also, this is one of my favorite things, you can also tab through these now. So let's say I open up trade balance. I can, it's in my tabs now. It's like a little browser, your little AI browser.
That's
So you
crazy.
can keep things here, you can close it off, but this is a great functionality as well.
Dude, that's awesome. And could we cover a little bit of the filters? So, like, for somebody that's US based and looking for just United States,
Absolutely.
medium to high priority.
Yeah, so you can go to the countries over here. You can select the countries that you want. You can search for it. We have a lot of the major countries. Click apply. This will now filter. I have high, medium, low. If I just wanted high and medium, I can just click off the low. And then now this will just show me since December 11th, right? And then if you click the date icon here, you can also do this week. You could do next week, this month, or just do something. You can select your own date range, right? So if I want to do from the 1st to the 14th, United States, I can start filtering for those events. And we also have a ton more categories as well. You have holidays, political events, central bank, all economic events, and then a bit more into further like, okay, is this government, GDP, inflation data, all that. We essentially we're like, how can we take our current calendar, make it way more powerful, faster, and user friendly? And I think we've really hit the nail on a lot of these. And of course, we've heard tons of feedback over the past not even 24 hours since launching this, and it's been fantastic. There's been things that users have asked us to add, which we're excited to bring out in the next coming weeks. And yeah, Jeev is coming on in a minute, guys. Throw a like for Jeev. Throw a
He'll
like
be
for
on in a
Jeev,
few minutes, guys.
100%. Yeah, he'll be on just
You
a
just got to
few
make sure
minutes.
you stick around. You don't want to miss them.
Throw that like and subscribe for Jeev. All right. He said he'll come out at 100 likes.
There we go.
Keep the numbers pumping. All right. But yeah, I think we really hit the nail. We're excited to add what all our users are telling us. We really pay attention to that. So if someone tells us, hey, we don't like this, we want to get to the bottom of, okay, why don't you like this?
Right.
Objectively, it's better. Objectively, it's faster, more powerful. How can we help you understand it more or even improve on it? So any feedback we love. Just check out the markets a bit. You can see dollar is just continuing. We did a little bit of a pullback, but I think this session will continue to push down. We'll also open up gold as well.
Yeah, I was gonna say, if you want to pull up gold on the market homepage, and we could go through the what's impacting the intraday and stuff like that.
Absolutely. So we'll pull up gold. So currently we can see Fed cuts policy rate, projects lower path ahead. So they know that that's what that dovish guidance is, right? That dovish guidance is the Fed telling us, hey, we are expecting that lower path forward, given from their summary of economic projections. If you look at the dot plot on it, right? Powell highlighted labor downside risks as well. So they're softening demand, which is the markets again pricing in upcoming rate cuts. So, and here it is again, markets price more 2026 Fed rate cuts, pressuring USD. So when the USD gets pressured, we're going to see gold continue to potential 42.35 bullish target, given any intraday noise and pullback, right? If in the high impact headlines, if somebody wanted to catch up, you could just scroll down to, let's say, yesterday and really see where Powell was talking about all these upcoming risks, providing more dovish guidance to the markets. And in that case as well, we also saw ES continue towards the upside and tap into 6,900. We did get a sell-off during Asian session, overnight session, But that's okay because guys, that's how the markets move. Markets move in waves. As day traders, it's your responsibility to be aligned with the higher time frame macro bias, right? And over here, we can even see that ES is still bullish. ES is still bullish on the higher time frame. We're still bullish on the intraday time frame. So when you are seeing outflows like this, just know that it is just for the markets to find a better price for buyers to jump in at. And in this case, which was around 60, 6,800, we have these wicks over here as well. And I'll highlight these. We have these wicks over here. We tapped into these wicks, and you can see we still did get a push towards the upside, which was nearly 50 points. So same bias and same fundamental factors. Fed delivered the 25 basis point rate cut. Equities broadly bought as lower rates support risk assets, and dollars sold off after decision, easing global financial conditions, right? With that dovish guidance that we talked about. So, and even here, if you look at Market AI Sentiment Index, you can see that the dovish guidance is one of the biggest factors that is currently in play across global markets. And this is impacting all markets. This impacts crypto, this impacts equities, this impacts global equities, dollar, commodities. This is the main fundamental factor that's currently driving volume and volatility in the markets. So again, as we talked about, dollar continued to sell off, right? That's exactly what our calendar showed us over here when we went to initial jobless claims, right? This still supports the bearish dollar coming in at 236,000. We are bearish on the dollar, impacted currency USD, and you can see dollar did a little bit of pullback that we talked about, and now we're selling off, and we should see gold continuing from this area as well that we had previous rejections at, right? So we saw gold continue from here, a little bit of a reaction during initial jobless claims, but this data still supports gold upside and dollar downside, continuing the sentiment that the Fed brought on yesterday.
Awesome, man. Dude, this is cool. Somebody had a question in chat. This is funny, guys. This question was coming from our Discord chat. So, guys, if you are here in our YouTube or on X, we do have a free Discord for you guys to join. Make sure you guys follow us on social media to get access to that link. But he was asking a question about the new economic calendar. Nilabh, if you don't mind pulling that up. And just pulling up, I guess we could look at the initial jobless claims again. He was asking about the how the impacted currency, the USD, how the old calendar showed the equities and gold and stuff like that. Is there going to be some type of shift, or is it just going to be off USD? And if it's bullish USD, would have a bearish impact on gold?
No, we are most definitely adding a much more refined view of what equities market this data report will impact, what commodities it would impact. So all that is coming. What we wanted to introduce was this fantastic version of this institutional economic calendar. And currently, it's just tied to the currency. But this even here is enough for people to understand. But it is coming. So in this case, if it's a dollar report, what equity markets will impact? It'll impact S&P, right? It'll impact NASDAQ, and then it'll impact, let's say, gold. But if it's a UK report, we want to narrow it down to it'll impact FTSE, right? So, or if it's a German report, it'll impact the DAX. So that's what we're building towards next. So expect upcoming updates very, very soon. As you know, the market team moves very fast. We are constantly working and pushing out updates. And I'll explain to you our entire philosophy. And this is a philosophy that I wholeheartedly agree with. This is how some of the best companies are built, is that you build something till 70%, you push it out, you get that feedback from your loyal users, from people who use your application daily. You let them guide where they want to take this calendar. Which is why you always see, you and I are always talking about feedback, is that I do meetings every day with users and getting their feedback on our product, because that's what truly drives it. And yes, we definitely have that in our roadmap for the next coming weeks, that we want to add equity markets and what other financial instrument is impacted by this data report. So we're just in the process of getting that done. And so maybe within a week and a half, expect to see more additions added to the calendar. But fantastic question.
Awesome, guys. Great stuff, guys. Market is constantly updating, constantly improving. And with this big calendar update, this is probably that next level big push. It's just showing you guys how dominant market MRKT is going to be in this space, guys. Truly
Exactly.
amazing.
I appreciate that, Kevin. And one thing as well is that our goal from the start was always to take retail to that institutional edge, to that
Yep.
institutional level. As you know, there's always been a big divide, and especially since I started trading in 2017, 2018 times, is that there was always a divide where retail felt they were underperforming, as well as they weren't as informed as the institutional desks were. And this is primarily due to access to data as well as understanding of that data. So not only are we fixing the access part, but we're also breaking it down in a manner that's understandable for retail traders. As you know, financial market, macroeconomics, geopolitics, it's all financial market jargon. It's hard to understand. As Jeeves says it, it's like speaking a new language, right? You really have to spend years trying to understand how to interpret it, or you can use a platform like Market that breaks it down. Like let's go for example here. We have unemployment rate and non-farm payrolls next Tuesday, right? So if I click unemployment rate, I can see that we have a maximum of 4.6. We have a minimum of 4.4, as well as the bank forecast and the regular forecast being 4.4. If we're above that 4.6, that's max pain. And that's going to cause pressure on the dollar because it's showing labor market cracks, unemployment rate ticking up. What are markets going to price in? They're going to price in sooner than expected rate cuts, right? They're going to price in more aggressive cuts. Now, if we come out below the minimum, which is 4.4, that's when you'll get a dollar that's bullish in the intraday time frame, right? And I just want to point out, dollars continue to sell off as we were talking. Gold has continued to pump as we were expecting, right? And same with ES. ES is still stagnating below 60, 68.77, but nevertheless, it is still holding its bullish structure. But just to get back to here, and over here, if we read higher than expected unemployment is USD bearish, lower is USD bullish. So watch for Fed dated OIS, front end yield, and equity markets, especially with the meeting just passed. So you can see this is all real time. This is all real time. And we can even look at non-farm payrolls because there's a wide range of numbers here. Non-farm payrolls maximum it could possibly come out as what the institutions are expecting is 106,000 jobs created. Minimum is minus 22,000 jobs. The forecast doesn't tell you this, guys, right? The forecast, having just the forecast and prior does not tell you this. Now let's actually go to next week. I think it's on the 16th, right? So we're the 16th. Non-farm payrolls, previous 119, and there's no forecast. These calendars don't have the unemployment rate forecast either. So you're just left with the previous in this case. But when you come to markets calendar, these are broken down to you. This is the exact same data in the Bloomberg terminal that institutions pay 40 grand a year for. And this calendar, I'm telling you, it puts retail traders at such a bigger advantage when it comes to trading fundamentals, trading the news. And that's how we wanted to make it, was that if I go over here / economic calendar, you can see that this is an economic calendar that shows you how to trade the data releases. All you really need is our playbook and full understanding on how to use these institutional ranges, such as bank forecast, minimum and maximum ranges. And that's it. Like this, we really broke it down. You could click non-farm payroll here. It's not going to tell you how to trade this. Like there's nothing on Forex. And look what this says over here. Usual, if I go to, let's say, unemployment rate, right? So you have a 4.4, release data delayed by 11 days, percentage of total for it doesn't really guide you. What happens when this data comes out? How are you going to take advantage of it? Oh, you click the brain icon here. You're like, oh, if data comes out 4.5%, we're still bearish because it's higher than previous, it's higher than the minimum, but we're still below the maximum. So we'll still get that sell-off on the dollar, but it may not be as intense as if we came out 4.6 or higher than that. And yeah, man, this I'm very, very proud of the team for cooking this up. This has been long awaited. We have really been just getting the data took forever. I'm going to be entirely honest. Getting that data from these institutional providers, it's not easy. It takes an arm and a leg. It takes persistence, and it takes convincing them to let you use this data because they don't want retail to have access to this. And I'm telling you this not because we built it. It's purely because these big banks, these big institutions do not want retail having the same access to these types of data.
Absolutely. Dude, if they did, they'd be much easier to access. It would be everywhere. It's not for a reason.
Exactly. Exactly. You would then see all these other calendars trying to get having access to this, because if we can build it, why can't they? Because
Right.
there's so many hurdles. There's so many hurdles, and not only that, market engineering, in my opinion, is one of the best engineering teams in the trading space, and I will put money on that. Is that what we have pushed out in a matter of weeks? It takes companies months to do. It takes other
Absolutely.
platforms 12 months to do. So we move fast. That's our thing. If anybody has feedback, we're always open to hearing it. We're always open to improving on it. And no feedback is bad feedback, you know?
Yo, dude, I also love the in focus tab right under the unemployment, how the important, like not only the high important, the high impact, because not every high impact has it. Initial jobless claims does not have that tab. Unemployment has that in focus because that has a stronger impact on the easing from the Fed.
Exactly. Very good point. So if you hover over this, you can see that Fed easing while unemployment near projections. Same with non-farm payroll has it. Fed cutting while emphasizing rising employment risks, right? Everything that we heard yesterday reflected on the calendar. And yeah, Kevin's right. Initial jobless claims doesn't have that because it's not as big of a report that's more important, because this happens every week. We get to gauge labor market data on initial jobless claims every single Thursday. So it's not as big of a focus as non-farm payrolls or unemployment rate is, given that those only happen once a month. And over the past few months, we've rarely had these releases just due to overall government shutdown and things reopening, and these data agencies now starting to pick back up.
Yep. It's big stuff. And guys, all this information, everything we're going over today, if somebody was listening to this through like a podcast, they think, wow, these guys must be in front of these big, massive terminals. They got all this information laid out in front of them. Nope, this is nothing that now you at home or even on your phone can now have access to, can easily be able to read an economic report, some data that comes in without sort of questioning or guessing yourself because it's telling you exactly what it means and where it should impact and how it should impact.
Absolutely. And it's as easy as this. You see initial jobless claims come out at 236,000. You look at the market playbook, you're like, "Oh, that's bearish because it's still within the range, right? It's still below the max pain." And now you look at dollar's been selling off. You look at gold's been pumping up. It's guys, this is it doesn't get easier than this. Please show me another economic calendar and I'll put money on this that does this job. It doesn't exist. It's only on market. And I know I'm getting excited, but I'm very, very proud of this. I'm very proud of what we're building. It every single day I wake up and I get excited. Is that how can we build the most powerful set of tools with our news feed, with our backtest fundamentals, economic calendar, homepage? How can we continue bringing value to users? And it just kind of unravels itself each and every day.
Dude, great stuff, man. Absolutely amazing calendar. I'm definitely excited to see what comes out next.
And 100%. I appreciate the early feedback you've provided us while you were getting to use the calendar, testing it. And guys, always hit us up if there's anything you want to see. We're always open ears. Kevin's giving me tons of ideas in the past, and a lot of those are going to come into fruition in the next couple months. But that it just this is what represents us always just listening to our users, having those values. Is some platforms will be like, we don't care about user feedback. At market, I'm like, if you hate the platform, please tell me why so I can
Right.
improve it for you. Let me get my team on this now. How can we make this better? And this right now, all of the home, the news feeds, our backtest fundamentals feature, all of this is a byproduct of users telling us exactly what they wanted to see, exactly what they prefer in a market research platform. And just because of that and having such loyal users that I'm grateful for every single day, we have become the leading platform in this space.
Absolutely, man. It's just getting started too.
100%, 100%. Just to look back at the charts again,
Yep.
beautiful sell off on the dollar, driven by initial jobless claims, playbook on point, gold buys on point, all the way from 42.10 when the data came out. We watched it. We understood that it was going to be bearish on the dollar. So when you're looking at gold, that's the inverse effect. In this case, markets are going to price in rate cut expectations, right? And you see gold pump up. ES is still below 68.77, but it's still holding its bullish structure, and we should see continuation over the next intraday sessions where ES makes its way back to 6,900 over here, and just on overall higher time frame, we are still holding that bullish structure, as well as heading off into potential 69.50s area. What are
Dude,
your
that's
thoughts?
awesome. Look at that, guys. Pretty clean range, pretty tight range, really, on the S&P lately.
Yeah, this range it's kind of messy. It's unless if you were able to, in my opinion, get a positioning in here for intraday, you could buy on the break of this, but you have to keep in mind like the sell-off happened, buyers jumped in right here. We are
Right.
seeing a bit of a continuation, so this could either lead to a pullback back down to this level or break above, and we continue to 69.08 over here.
Yeah. I'd be careful now that we didn't just make some lower lows right there on those lower time frames right there where you circled,
Yeah,
and we start making some lower highs and we fail to get any higher. You know what I'm saying? To that
yeah. It's something
too?
to be cautious about for sure,
Yeah.
especially because the next data report in focus is next week, right?
Yep.
We don't really have anything until next Tuesday that's really going to hold focus. We have Fed manufacturing index coming out on Monday, but the main focus, the main meat and potatoes is unemployment rate, non-farm payroll, average hourly earnings, retail sales, all this chunk of data over here that's going to be in focus. So yeah, maybe the next set of data that really takes us back to these intraday highs and actually breaks above here is that labor market data that's to come out next week. We may just see that ranging, and Kevin's right. It's that if you start seeing that lower time frame get a bit more choppier, just be wary that we could lead to a deeper pullback to 6,800. Or once we see breaks of this, then we can truly head back up into these highs at 69.50s.
Absolutely. Nilabh, is there any so now that we got the rate cut in December, what are we anticipating next? What could really drive optimism next?
Yeah. So in order for equity markets to continue towards the upside, you have a few. If we look at just, we scroll down here, you have again labor market data coming out. You have CPI as well, right? And these are the data reports that are going to be in focus and really going to drive that. So if we see, let's say, NFP come out just bad. In this case, if we click non-farm payroll, if it came out below 20 or below 22, we would see markets pricing in additional rate cuts or sooner than expected rate cuts. If unemployment rate ticked up, right, ticked up to 4.5 or 4.6, did a 0.2% increase, we would see dollar bears continuing. We would see markets continuing to price in the upcoming rate cuts, which would then add to ES going towards the upside, right?
That's cool.
And
That's
and and same thing with CPI. If CPI comes out lower than forecast, then that's when you would see markets continuing to price in upcoming rate cuts because inflation is falling, labor market showing cracks. So it's this playbook really guides you and gives you scenarios, and this is where you could start connecting the dots that were once so difficult to connect. Is that okay? You're like, if labor market is Powell talks about labor market risks, maybe next week we get a scenario where we do see some bad labor market data. Now, what's that going to do? It's going to further add pressure on the US dollar. It's going to further support gold bulls, ES bulls, because all that means is that markets are pricing in upcoming increased rate cut bet odds and maybe faster rate cuts, right?
yeah. Dude, that's awesome, man. That is great. Do you want to cover gold at all?
Gold, yeah, for sure. So again, as we mentioned, this was the data release. Dollar came in as bearish due to the
Right.
market playbook. Gold continued its upside. We were talking about reaching this area first, and now if I just get out of the lower time frame, is that once we're above like 25 over here, 42.25. Once we're really above here, then we can start heading up into, let's say, 42.30 and more so towards the upside. But gold, I'm still bullish on it. If I'm just going to turn these off, we can see that last week we really just covered this zone over the past since early December. 40, 41.75, 41 high 60s has been the zone that's been holding up. We are in this larger range, but we can clearly see points of ranges that we can target given that Fed took a dovish approach. Fed did the cut. We are seeing impact from initial jobless claims. So if we continue breaking towards above 42.25, first stop 42.30, but we need to get back above that. Or maybe we would see some sort of play like this where you break above, come back down, create a higher low, and then once you get above here, then you can start targeting like 42.50s over here and then 42.60s being the highs of this range towards the left over here, right? But similar to here, we got above 25, headed to 30, came back, retested the previous market structure, and then continued up. So we could expect something like that. Is that if we do break above this little range that we're in on intraday, we get that push towards 42.30s, come back to some sort of retracement, and then head towards the upside. And this may be something that happens next week because the main data in focus now is the labor market data on December 16th on Tuesday.
Awesome, dude. Guys, we're all prepared, man. It sounds like we've got some economic data coming up. We know how the Fed is at the moment. And with the new market economic calendar, we're prepared for every event going forward. And we're going to know how markets are going to react as soon as we get that economic data. So very interesting. Great stuff there. Nilabh, do you have any other input or anything else about market you want to drop and leave for us before we wrap up today's market in the morning?
I think this has been a great one. Like this has probably been one of my favorite shows. I love showing off things that we build, man. And this one is one of my favorite tools that we built. Is this calendar is only going to get more cracked. It's only going to get better. It's only going to get more powerful. And we just can't wait to show you what we have. It's one thing that I think everybody realizes now is that we innovate at market. We don't copy what other people's do. We don't care what they're building. Is that we really convey our knowledge that we have garnered over the past 8 to 10 years, and we're building tools that are unique to us. And now we're seeing other people trying to replicate, but that's where we have a separation, is that the team behind market is unlike anything else. Kevin knows because Kevin's on the team, and we're just super, super proud of every single day what we build and how our users just fall in love with it.
Yeah, the progress has been amazing, man. Since I joined 5 months ago now, 6 months, bro. It's crazy how fast time flies too.
Right?
But
yeah, it's insane, man.
the progress.
We hit 1 year for market last at the start of this month, so which was exciting. And it's just a year in the game. Imagine what we can do in 5.
Unstoppable, guys. Market is going to take over the industry, so make sure you get in now while you could grandfather into a better price.
100%. But I appreciate you having me on, Kevin.
Absolutely, man.
We'll just do a quick look again, guys. We saw that dollar bears come in. This was data release. We got that pullback right after, as we were talking about. So you can rewind Market in the Morning and check that out. Looking at initial jobless claims that pointed to a bearish dollar coming in at 236, pointed to a bearish dollar. Dollar saw the outflows. Gold saw inflows in the lower time frame. From here, we headed back up to this price sensitivity area, and ES is still remaining below that, but we are printing these higher lows and higher highs in the lower time frame. So thanks, everybody. Kevin, unless you have something to add.
No, I think we're set. Somebody had one last quick question. Nilabh and Kevin, do you see the UEC data would move gold today?
No, not necessarily. I think the main focus is everything that, today's usually on Thursdays, the main focus is initial jobless claims, continued jobless claims. The markets are way more focused, in my opinion, on unemployment rate and non-farm payrolls, which is now next Tuesday. There's no big data reports coming up between now and then. So a lot of these are low impact reports. Some are barely hold an impact. We have a few speakers, right? But the main, again, meat and potatoes is the labor market data next Tuesday.
That is absolutely great. Eric, I love it. Thanks for all you guys do at Market. Hashtag Bloomberg Who. We got to start hashtagging that on all our posts.
Hashtag Bloomberg Who. That's right. Thanks, Eric. Appreciate it, man.
Guys, I hope you enjoyed today's Market in the Morning. Nilabh, thank you so much for being here and taking over for Jeev today. Hopefully Jeev feels better.
Absolutely. Absolutely. He's still coming.
He's
Still
still, yeah,
coming.
guys, a few
Guys,
minutes.
throw the
He's still
like. He's coming.
We just got to run the like button up. We're almost there. He'll come. But no, for
Awesome.
real, guys, run that like button up to 50. Don't forget to subscribe for Market in the Mornings, Tuesdays and Thursdays. Tuesdays, we have Nilabh on. Thursdays, we have Jeev. Today, we were lucky enough to have Nilabh because Jeev wasn't feeling well.
Amazing. Thanks a lot, everyone.
Guys, have a great day. Happy